Okay, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where each morning in the Middle East we reflect on the market open in Asia and the direction of travel for the day. Let's kick off with Matt Stanley, Director of Star Fuels. Matt, it feels like this week and this very moment of this week is caught in the dilemma between glass half full and glass half empty. Prices opened down initially this morning in Asia, now a little bit up. It's a mixed bag. What's the direction of this market?
Morning, Sean. Happy Paddy's Day, mate.
Bump-a-dump, dump-a-dump.
The best day.
Will the bagpipe players be coming out from behind your seat there any moment now?
Yeah, there'll be a procession through in a minute, don't worry.
Or is Andy going to sing Danny Boy? That's the trick we have up next. That's it. Okay.
Yeah, you're right. Look, it is this, this push and pull between the bulls and the bears at the minute. Open interest on Brent is the highest it's been since last April. We all knew it happened then. WTI open interest is way up as well. And it seems to open up with Asia not particularly liking what's going on. You know, the low this morning was 68.12. The low yesterday was just above 67. And then Europe wake up, decide to ignore every fundamental headline and buy the market. And we've been between 68 and 70 now for the last few days. We seem to be looking for new cues as to what's going on. There's this UK and US vaccination rollout program, the same as here in Israel. It's doing very well. But, you know, Germany, Italy, France, they're all lagging behind us. We're reading about these stories about the AstraZeneca vaccine, of which I'm highly skeptical. You know, it's 0.00024% that you're likely to get a blood clot apparently, and that even that hasn't been attributed yet. So, you know, you take your chances on that. But yeah, it's been one of those weeks where volatility is high, but we've stayed in a very, very narrow range. So it'll be interesting to see what happens later. In the short term, people are going to look at EIA data later, see what's happening there. Spring break we are in the US, you would hope to see a decent draw of products for diesel and gasoline, but refinery runs are still down. And that means that imports will be down. So we're on a sort of precipice at the moment. So it'll be interesting to see what happens.
Kate Dourian, MEES contributing editor, non-resident fellow of the Arab Gulf States Institute in Washington. Kate, welcome back to the table. Is this just not a simple case of old-fashioned supply-demand realities here with 8 million barrels of a wet blanket sitting on top of this market, idle capacity? We can't get any higher under those conditions, can we?
Yeah, I think that probably should weigh on the markets, but you know what it's like. It is this pull and push. I think partly you had the attacks on Saudi installations, on Ras Tanura. I mean, there was no damage, but I think psychologically the market is thinking, hang on a second, OPEC Plus is keeping supply tight. We're going into the second half where we do expect demand to pick up. Okay, it's still going to be less than it was in 2019. And the momentum is for improved demand. We see China importing more oil than it needs, so probably some of it going into storage. And I think China, people say, oh, when the price goes up, China stops buying for strategic storage. We don't really know exactly how much there is, but they're not that price sensitive when it comes to buying for storage. So that's likely to go on. I think in the US, we're still seeing the ripple effect of what happened in Texas. Production was down. But yes, I mean, I think the fact that there's so much spare capacity at the moment, I think it is the highest, is going to weigh on the market at some point. But I think it's a combination of fundamentals plus the psychological impact of the attacks on Saudi Arabia. Yemen is heating up with attacks on Marib. So it's a combination of factors that's leading to the situation the way it is.
Andy, Laven, good morning. Welcome back to the table. Andy, do you see the inventory report yesterday, the API first of the week out, surprising a little bit on the downside? Is the inventory still the main data point to watch here? I know OPEC Plus had always targeted that as its 5-year average target, but there's other things now, or is inventory still a market moving data point?
I think the reality is, anything's a market moving data point at the moment. When you're under a wet blanket, as I think Matt put it, it's like any news is news. So whatever's going on, we'll like to see. I think the reality is, or everybody has kind of summarized it in a slightly different perspective. Even you did, Sean. I think the market has absolutely no idea where it's going to go, and therefore it's kind of just trading sideways. And any news is perceived as good news or bad news, and therefore it's just about what the kind of sentiment that generates. If you absolutely want to just stand back and say, let's use the data, the simplicity of the word is that we have got an oversupply of a significant proportion. Therefore, there is absolutely no reason why price should be where it is today. The only reason it is because they are keeping it off the market, and there is this hope. And I think everybody is in the same place, which is why we're at the prices we are. There is this hope that the vaccinations will start people moving out, that businesses will start moving back and doing business. Therefore, the demand will start coming back. And it's the hope that is keeping the prices up where it is.
Matt, we're already seeing that hope convert into the reality in the US. Gasoline data is showing a fairly strong return, less than 1% below year ago levels. Aviation, air flying is recovering from the low in January, of about 1 million, now up around 1.4, moving to 1.5 million passengers a day. I mean, the maybe is now turning to some form of reality in certain places. Matt, you're on mute. Sorry, mate.
Sorry, mate. Paddy's Day's got the better of me already.
You've had your Guinness already. See, all is revealed. Just
good
off
iron.
Camera as their little keg.
Yeah, look, again, it comes down to this fracturing of demand recovery. China and Asia have done specifically well, and really, as Kate said, provided the uptick in demand last year. Those figures that no one is really sure about regarding their SPR buying. But they're refining a hell of a lot of crude oil, and there is a lot of, say, distillates. If you look specifically at distillates at the moment, and there's a piece on your digest today that VLCCs are going from Asia into Europe. And look, they're 90-day time charter vessels. We're in a similar pattern, nowhere near as dramatic as last year. But the gas oil market in Asia has fallen into contango. Now, the steeper we get into contango, the more that floating storage works. Freight, as we know, is weak. It has been. It had a bumper year last year, the first half of last year. EU gas oil is in contango as well. Products are not faring that well, but in domestic demand is looking good, and that's because the globalization is still a long way away until we either see vaccine passports or whatever we do see. So there's sort of a fracturing of fractures. It's domestic demand, specific products. Jet fuel is doing better, but it's still weak. It's still lagging behind things like gasoline. But the market on the Asian gas oil side is starting to concern quite a few people, and that is really out to contango now until sort of September. So that's something that the market is looking at very, very closely.
Kate, the IEA, your former homestead, is due to release its monthly report today. If we see yet a further downgrade, revised down in demand recovery, as we've seen every month now from the IEA for the last, 5 or 6 months, that will give the market a direction, no?
Yeah, I haven't seen it yet. I haven't got the embargoed copy. I've seen the medium term, which is coming out at the same time as well. But we can't talk about that because it's embargoed. I think, again, it's probably going to be a revision up rather than down for, demand for OPEC oil, because we're seeing still weakness in non-OPEC production, except for a few pockets where it's rising. US, for example, everybody expects that production will actually fall further than it did last year when it fell by about 2 million. So I think that recovery is going to take time. You've got all the companies that are involved in the shale patch mostly saying they're going to keep fiscal discipline, return cash to shareholders. It's all about. It's almost as if the industry is in standstill at the moment. There's not very much investment in exploration and production, and everybody keeps saying, "Oh, we're going to have a problem looking, into the future, if we don't increase our upstream spending," which
we're starting to see on the equity markets, Kate, the shift, the momentum away from literally momentum growth stocks into value stocks that brings commodities and energy companies back into focus, and that could maybe provide the investment, the confidence for the majors to go back out into the fields.
Somebody pointed out something to be one of the big insurance companies is no longer going to provide insurance to hydrocarbon projects. So if you start building now, 5 years from now, you may not be able to insure. I mean, it's there is this it's a carbon constrained investment environment, and I think if you look ahead, everybody expects, apart from certain countries, if you're looking at where capacity is going to come from, it's probably going to be UAE, Saudi Arabia, and maybe a few pockets, Brazil, Guyana, Canada. So I don't think that's going to change very much.
Andy, your thoughts on the direction of the OPEC plus? We've had the last two meetings, both of them have delivered a surprise. If that trend continues, then the surprise, what would it be on April 1st? The surprise would be yet again, perhaps not to increase. I'm wondering, is it time for OPEC plus to park its surprises and sort of get on board with where this overall global economy is going? What are your thoughts?
So I think what you've got to look at is what do the countries actually want? They want to generate more absolute revenue. Okay, so the problem they've got is they are holding so much back that they have to be concerned about what would happen if they put it onto the market. And I think we are so finely balanced that any big moves like putting 1 million or 2 million back on the market, the trend would start going downwards, not upwards. So I think, in all honesty, I think they're going to continue to keep their cards very close to their chest, and we will have everybody running around trying to predict what they're going to do and going to get no signals from them. And so therefore we will continue to see surprises. I think they
if they don't on this occasion, Andy, move with the consensus, so to speak, i.e. more oil on the market, could that be seen as bearish? I mean, a sell-off on the back of it, given that clearly signals would be something else.
So you can see it as bearish. You can also see it as pragmatic. I think the challenge is, until we get a clear direction for demand, the reality is we've got plenty of supply. It may not be kind of coming from where we are in the long term, but certainly short term, there's no issues in terms of supply. It's all down to demand credibility, and that's the balance they're playing.
I mean, it seems, Andy, in a sense that if they don't increase OPEC plus, it's again to bang this bearish drum, that it sends a signal perhaps that their expectation is for non-OPEC oil to be coming back. Shales would be coming back, so we're not going to increase. Iran's coming back, so we're not going to increase. Those sort of in the vacuum interpretations could be a push prices to the downside.
So that's the supply side. The other side could be that we haven't seen credible demand growth that is going to be maintained, and we don't want to put another 1 million back on the market then to have to take it back off again. The other side of it is, actually, when we're chugging along at around $70 a barrel, isn't that okay? Why do we want it to go up? Why do we want it to go down? It's kind of working. So you've got three very different perspectives, all of them using very different data points.
One of the reasons, Matt, perhaps is to sort of reconsider, and I know at the last meeting, the Saudi oil minister somewhat dismissed it, and that is the position of India fastest growing oil importer in the world, likely to be one of the biggest customers for Saudi and other countries in the Gulf in the not too distant future. And we're seeing now what at least Reuters are calling a standoff escalating between India and Saudi Arabia. India cutting by 25% in May their imports from Saudi. What do you read on this? Do you think it has legs?
It's the third biggest importer of crude oil in the world, so of course it has legs, and legs that the Saudis need to address. It's America. The US became, I think, their second biggest supplier this week. Look, there's a couple of conflicting stories I'm reading regarding India, just how well they're dealing with the COVID situation. I mean, I'm sure you're not a cricket fan, Sean, because
well, I am pleased that there is an Irish captain of the English cricket team. I mean, that is a good thing, perhaps, and that there is an Irish captain of the English football team, and that's probably a good thing as well. So
we won't get into that on particularly.
But anyway, not to be sidetracked by these.
No, but there was, when I was watching, there was 60,000 people at this new Narendra Modi stadium, and it was like, I was like, oh great, India. There was a guy on the Times who said it's great to watch the cricket and see that India have got over the COVID pandemic. So there is these conflicting stories that are coming in. That is obviously going to have an effect on demand. Is the Indian oil system so fragile that, of course, refining margins are low? People like Reliance, who supply a lot of the domestic demand. When gas oil cracks in Europe are at -$5, below $5 a barrel, it's not just cheaper crude that's going to keep that demand sustained. So they will go wherever.
Do you think the Prince had a point at the last meeting when he said, well, if they're so concerned about the cost of the oil price at the moment, they should take some of the barrels out of storage that they bought 6 months ago at half the price it is today, and that really India are just using external actors to blame for what are very high taxes on the retail?
I think that it's kind of dangerous territory. He can't dictate how India look after their own oil supply. They probably hedge those barrels as well. So, it's not just a flat price punt that they made. Perhaps they did. I don't know. But, there are other barrels that India look at, supply from. And perhaps it's a shot across the bows. And ultimately you come into demand destruction, the higher that flat price gets, like Andy said. If you're happy between 65 and 70, is that the sweet spot? Is it for the end user? That's the question.
Kate, meanwhile, we have some very serious challenges. Obviously, we're talking about retail prices in India at the pump rising to record levels. But in Nigeria, an OPEC Plus member, inflation hit a 4-year peak in February. Food prices jumping more than 20%. These are becoming serious challenges to this recovering global economy that the OECD is boasting about.
Yeah, I think it's one of those situations. Nigeria is probably one of those countries that, along with Iran and a few others, who can't really manage even if prices are above $100 because it's just the economy is so badly managed. So I think but the inflationary pressures are mounting anyway, not just in Nigeria, but elsewhere. With fiscal stimuli, and we haven't really seen the impact of the stimulus in the United States. So I think that's one of the risks. People are saying, oh, people have been cooped up in their homes, they have lots of available cash that they've put in their cupboards, and they're going to start spending. But I think it's too early to say how we're going to open up, if we're going to start traveling. Again, I mean, what I don't understand is the IEA says, emissions are rising. They're rising to higher than 2019 levels. But I'm thinking, we're not flying. We're not really driving as much. So where is that coming from? Is it because the US is burning more coal? Is it, Australia burning more coal? It's very difficult to see. Are the Chinese flying more? I don't think they are. I mean, there's more air traffic in China, but I think, inflationary pressures are starting. And also with the price at this level, it's going to be very hard to convince Russia to go along with keeping production, in check. And as it rises, I mean, we saw OPEC
Well, they seem
production,
to be
OPEC
getting a
plus.
pass. In the last two meetings, Russia got a pass to increase while everybody else hold the line.
Yeah, a total of 260,000 barrels a day, over the 2 months. And I think it's going to be harder because even though production has has fallen, and they are complying, but you see creep, it's creeping up. You've seen increases from Nigeria, from Iraq. So I think it's going to be harder to maintain that cohesion. So is it going to be compromise after compromise? I mean, how much longer can Saudi Arabia afford to give Russia a free pass and sort of look the other way as the others are overproducing? So I think that's a challenge. But I don't know what they're going to do. I mean, as you said, it's April Fool's Day when they meet again. So look for a surprise, maybe again.
Maybe again. Andy, we're seeing in China, the Chinese continue to build up their inventories again over January and February, up 1 million barrels a day. That has been a big change in the China demand picture over the last year, with from 90 days of oil inventory cover to now over 100. Where do you think that goes moving forward?
So I think it's a symptom of exactly what Matt was saying. It's a symptom of this fractured recovery we're going to start seeing. I think the Chinese are to a certain extent, they're very inwardly focused. It's about getting their country sorted first, to an extent, at the expense of everybody else. And I don't mean that in a political way, but just that's their focus. And they've been very successful at that. So I think what we're seeing is the ability of the Chinese government to manage their country across all sorts of fields, including infections, inoculations, travel, etc., etc. And there's going to be increasingly stark contrast between places like China, where you can foresee a very positive recovery in China, and other places where you can foresee potentially there being a very bad recovery and things getting worse. I mean, coming back to the cricket, the first two T20s were with half-full stadiums, and the third one was empty because of COVID. So I would say, in terms of recovery, India is on a knife edge, whereas actually China's got a very clear path out.
India, I think, are just kind of ignoring it in a way. Coexisting with it might be the better way to say it, given the economic reality there that they cannot afford to shut down, and it's relatively working. The interesting thing about the China point is China comfortable buying crude at $70 a barrel? That's probably a positive indicator. Let's go to this survey question today to get the view on this point I made earlier with Andy. Would the oil markets consider the bullish or bearish decision if OPEC were to hold the line yet again when they meet in 2 weeks' time, that to continue to hold current production levels and don't increase supply at the next meeting on April 1st? Would the oil markets consider that a bullish move or a bearish move? The last time they did it, we got a kind of an initial bullish reaction, but then, as we know, and we're talking about, prices came off and are back more or less where they were before the last meeting. But the next, if they were to do it again, bull or bearish, welcome your views on that. Matt, looking forward, we've got the IEA meeting today. We've got the Fed also, IEA meeting, IEA reporting. The Fed are also back at the table to give some sort of forward guidance on where they see inflation and other matters. What do you think directs the market for the rest of the week?
I just want to touch on your survey question and what Kate and Andy have both said. I would like to see if they did put 1 million barrels back in the market right now, where Brent would be trading, because it's so fragile that just 1 million barrels back, as Andy said, it would have, I think, a pretty catastrophic effect on the recovery where Brent has been trading. Bearing in mind, at the end of October, when the UK went back into a lockdown, Brent traded down to $34 a barrel. So we're double that now. It's been an extraordinary recovery, but it's so fragile that even 1 million barrels back will knock out that supply demand, what OPEC have done. But we're in turnaround season. Sinopec have taken down sort of 10 refineries. That is in its own 1.4 million barrels a day of demand. So to put that back into the market at this stage would have been catastrophic. Next month, I don't think they have a choice. I think it gets to a point where, these refineries are going to start looking for barrels, say, beginning of June. Obviously, we'll be in air conditioning season in the Middle East, so straight run fuel oil, cracked fuel oil will be in demand. So that means higher runs for refineries, crude-wise. So I don't think they've got a choice, to be honest. So I think if they don't, then it's extremely bullish, $90 a barrel, and then India really do start complaining. What the IEA think?
Really do start complaining.
Yeah, well, they'll have something to complain about then. Not just $70 a barrel. My balance sheet's taking it. It'll be a proper complaint. IEA, I agree with Kate. I think that its can is being kicked down the road to Q3. It was post-Christmas, then it was spring, and now it's summer. Do I see a dramatic recovery in demand in July? No, I don't. I think it's October. I think it's Q4. I think that they'll downgrade demand forecasts for first half, and then I think they'll probably increase them for the second half. This vaccination stalling AstraZeneca thing has probably made them rewrite the last chapter, to be honest. So I'll be intrigued to read it in about an hour's time.
Well, it is the AstraZeneca issue. I mean, it is the first kind of blip on the vaccine road, and given that all of these vaccines are still defined as emergency use permits, i.e. they haven't been through the full rigor, there's probably a few surprises in there. It would be just too much to hope for that there wouldn't be, and it's maybe somewhat unrealistic. Kate Dourian, once upon a time, OPEC really did worry about the price of gasoline in the United States, and we are already on track to $3, maybe even a $4 average for the summer driving season. So yippee, all of the Americans come out from their closets, so to speak, or their houses, and they find the price at the pump is very high. Does Saudi care about that anymore? Do you think that guides OPEC policy at all?
Well, I mean, if you look at exports from Saudi, they're either down to zero or a couple of 100,000 barrels a day. So I don't think you can blame them for it. I think what you're looking.
But they are curtailing the global supply, obviously.
Well, yes, but it's also partly because US production has fallen, and they've taken a decision not to really ramp it up that quickly. If you look at the number of rigs, it's still about more than 50% down on what it was in 2019. So I don't think that's going to grow very much. No, it's not. I don't think it's a concern anymore. I don't think the Saudis are looking. I mean, if you look at the growth, GDP growth estimates for India and China, you're talking 9%, 7.5%, and you look at the GDP of Russia. Russia managed pretty well last year when prices were down. I mean, its budget deficit was much lower than it was in the Gulf states, for example. So I think they're going to be looking at their own fiscal balances. They're going to be looking at shrinking their budgets in the Gulf region, because at the end of the day, they have to defend that dollar peg, and you're not going to be able to do it if you're tapping into your foreign reserves in order to balance your budget. So I think there's a lot of factors. It's more every man for himself at the moment.
Okay, or woman for that matter. Let's go to the survey result before giving Andy the last word. Still 2/3 to bullish, 1/3 bearish if OPEC were to hold the line. Andy, your closing thoughts today.
Finally, a poll that I got right.
There's no right answer here.
So I think what's interesting is that the OPEC are implicitly looking at macroeconomics rather than the individual countries now. I think one of the things that happened as a consequence of COVID is we are going to see a variety of K-shaped recoveries everywhere in all economies, in all markets. So if you try and worry about the US, or you worry about Russia or anywhere else, you'll miss the big picture. So they're looking at the big picture. And actually, implicitly, that's exactly why the trading companies, the big trading companies like Shell and Vitol have said 2020 was one of the best years ever. Because where you
it was the best year ever, not one of, according to the headlines this morning.
Yes.
$3 billion.
Exactly. They're making money from this dislocation. This fracturing creates the opportunity for the trading companies. So if you try and manage OPEC at that level, it just is not going to work. So for me, the big picture is steady ship going forward. Just keep looking at what's happening in the macro level. But underneath the water, there is going to be an enormous amount of churn as people come back and have to go back into lockdown. Italy's going into a third lockdown, a third wave, all sorts of stuff. So there's this two-level story, macro level and the micro level, which we have to watch.
Okay, well, we'll wrap it up there. I was on the wrong answer, if you like, according to Andy's metaphor, that I think it would be bearish if OPEC didn't move on the next step, because I think it would signal chaos to the markets. And as Kate said, every man to themselves, so to speak, and the pumps would be unleashed. And that would probably, with 8 million barrels of idle capacity lying around and a few in America as well, I think that could be a very bearish move. But that's the contrarian sense. Thank you, Kate, and thank you, Andy, and thank you, Matt. And tomorrow we will have the great Chris Bake on for the first anniversary show of the Daily Energy Markets Forum, which we're really excited to have Chris on. He's going to be flying in on a jet and landing on the Zoom. But nonetheless, tomorrow we welcome the sort of end of the weekend. Chris's outlook on all of this will be great with Andy Critchlow and Dr. Carol Knackley, as always, on a Thursday. But thank you, everybody, for your participation and engagement today. We'll catch you later in the week. All the best.
Thank you.